Good morning, everyone. It's a privilege to be here today and discuss a topic that sits at the core of modern technology and innovation, and one that I think is critically relevant to any market participant. I'd like to first acknowledge and welcome Australia's Chief Scientist, Dr. Cathy Foley, and representatives that are here today from the Australian government, as well as the state governments of New South Wales, Victoria, and South Australia. For some quick context, thank you, Steph, for the introduction. I'm Jonathan Belz, CEO and co-founder of BFA Global Investments, an investment management firm based here in Sydney, focused on generating true alpha for family offices, advisors, and sophisticated investors in emerging opportunities globally. Our mission is pretty simple. It's to identify globally relevant, technology-driven investments for a cohort in Australia and Asia that has historically lacked access to these opportunities. My career has spanned nearly 20 years across major financial hubs, including in Sydney, New York, Hong Kong, and Shanghai, where I worked with Goldman Sachs and Credit Suisse. As Steph mentioned, I had the privilege of managing the private asset portfolio of one of Australia's largest family offices based in Melbourne. The deep exposure to both public and private markets has given me a unique perspective on global ecosystems of technology and people, and how the semiconductor sector is shaping not only today's economy, but the technological future we're all moving towards. Personally, I've always been fascinated by the intersection of technology, languages, and human cognition. And this interest took me to China to master Mandarin in my late 20s. The journey of crossing over into new networks and knowledge reinforced my belief in technology's power to alter neural pathways and open up new possibilities, just as semiconductors are redefining how we all interact with the world. Given the mission of BFA is to empower investors to identify opportunities on a global scale, particularly in emerging technologies and private assets, today I'll be sharing my insights on the opportunities and risks in the semiconductor space. I'll also touch on the landscape for Australian investors and the broader economic drivers that are shaping this critical industry. I have to emphasize that nothing I say today constitutes financial advice. Any reference to companies or investment themes are completely general in nature, and they're just meant to provide a broader understanding of the sector as a whole. Semiconductors, as I'm sure most of you know and why you're here today, are widely recognized as the bedrock of modern technology. And what's unusual is maybe a slightly concerning consensus in industry and investment leaders around this fact. Jensen Huang, CEO of Nvidia, recently said semiconductors are at the center of the transformation led by AI, which will open up immense economic opportunities. Similarly, Pat Gelsinger, the CEO of Intel, has noted multiple times, for investors, the opportunity in semiconductors isn't just about today's technology, but about leading the next wave of innovation in everything from AI to 5G to quantum computing. Mark Liu, the chairman of TSMC, famously referred to semiconductors as the oil of the digital economy, highlighting their essential role in every sector. And for investors, this means long-term growth as the demand for digital solutions only continues to rise. But what's new, and I believe what's important for investors today, is the steepening curve of demand on the semiconductor industry to power transformative technologies like AI, 5G networks, renewable energy, and quantum computing. As investors, what we should be really focused on is new information and disruptive change, not what we've seen previously. It's the acceleration we're seeing now that creates investment opportunities with asymmetric return profiles for those who are able to scale into the space. Consider the case of Nvidia, whose market capitalization surged by over $3 trillion in just a few years, with the company achieving an unprecedented growth from $2 trillion to $3 trillion market cap in just 96 days, the fastest growth between those 2 points in history. Nvidia now represents, as of yesterday, 33% of the S&P's total return in 2024. A staggering statistic, particularly when you consider that the previous record was set by Apple in 2020 with a 23% contribution. The growth is even more striking to me when we consider the broader economic context. Venture capital markets and private firms have been under considerable pressure over the last few years. IPO activity is at record lows, and M&A activity has been muted by concerns over antitrust regulation. We've also seen a significant correction across tech companies since the era of low rates and free money ended in late 2021. In this climate, many capitals have actually struggled to raise capital at all or maintain profitability, especially those in hardware and early stage tech. Yet despite these challenges to broader markets, the semiconductor space, driven by AI and high-performance computing, is reaching an entirely new level of relevancy. For investors, though, understanding this market backdrop, which is likely to persist in our view, is critical. In difficult markets, it's not simple enough to just follow momentum. These won't sustain investment returns. There's a significant dispersion between winners and losers, and these are often determined by where capital is accumulating as a determinant for future success. Thankfully, we have pretty clear signals on where capital is accumulating, which gives us strong clues about where to focus our investment efforts within the semiconductor value chain. We can, of course, look simply at companies like Nvidia that have created the aforementioned $3 trillion in market cap, but they are just part of a larger ecosystem. One of the most critical areas of capital formation today comes from hyperscalers, companies like Meta, Amazon, and Google. These tech giants are spending significant capital on custom chip development to enhance everything from cloud services, AI capabilities, and data center performance. For example, Amazon's Graviton and Inferentia chips, Google's TPUs, and Meta's custom chips for AI processing are transforming how they manage massive data centers and improve AI-driven workloads. Their aggressive investments highlight how critical semiconductors are becoming across multiple layers of digital infrastructure. As private capital floods into these spaces, the governments are also stepping up with significant investments. The US CHIPS Act, which allocated initially over $52 billion to boost semiconductor production and research, is just one example of how geopolitical imperatives are accelerating investment in this space. It also seems like there could be a second CHIPS Act to follow shortly. In Europe, similarly, we've seen over 43 billion euro committed. And like the US CHIPS Act, it was designed to reduce the obvious resilience on Asian suppliers and build out the broader semiconductor supply chain. Australia too has opportunities to align itself with these initiatives, supporting efforts to improve the global supply chain and capitalize on the sector's growth. From an economic driver standpoint and for investors, the combination of government backing, corporate capital expenditure, and the urgency to secure supply chains is creating an environment ripe for long-term growth. The urgency is only increasing as geopolitical tensions push countries to seek self-sufficiency in critical technologies like semiconductors, and as competition in the AI and high-performance computing space heats up dramatically. We are seeing much shorter innovation cycles, faster competition, and increasing pressure to deliver advanced chips that can support the next generation of AI, IoT, and edge computing. To bring some of these economic drivers and opportunities to life with a couple of specific examples, one thing that we are seeing as a significant opportunity is around semiconductor design and new tools that are designed around extending the life of Moore's law, whether it's through photonic technology and new applications, or even how the chips are wired together. Another area we see warranting close attention is in the data center space, both from the perspective of building the scalable platforms for companies like OpenAI, who need the compute power for the chips, but also from an energy perspective, which is a major constraint on the ability of companies to leverage the power of these new chips. Similarly, there's a rising opportunity in renewable energy solutions tied to semiconductors. As energy consumption becomes a major constraint, the companies providing modular or scalable energy solutions are likely to see significantly increased demand in the short term. AI chips, as probably most of you know, consume significantly more than traditional GPUs on an energy basis, and energy was already a significant problem long before AI was making its way to our consciousness. Closer to home in Australia, quantum computing is on the verge of breaking into mainstream relevance. Far from threatening the semiconductor industry, as some may think, our view is quantum computer will demand more advanced hardware, further fueling the growth of specialized semiconductor solutions. This opens up a completely new wave of investment opportunities as we move beyond simply discovering and into designing our technological future. With all of this momentum in the semiconductor industry, it's pretty easy to get caught up with the sheer opportunity. But always, as always, we must temper our excitement with a clear strategy for diversification and risk management. Semiconductors, like any other sector, or perhaps even more than any other sector, are inherently cyclical. We've seen periods of massive growth, often followed by oversupply or technological disruptions that lead to significant corrections. The geopolitical risks that are evident in the sector only add to this. In light of this, investors, in our view, should not be taking singular concentrated bets on any one company or in a niche. Instead, we believe the most effective approach is to consider exposure across the entire semiconductor value chain. This not only includes chip makers themselves like Nvidia, AMD, TSMC, but also the companies that supplies the critical infrastructure, such as ASML, which make the lithography equipment to produce the chips, or companies providing the materials and tools necessary for that manufacturing process. Additionally, as mentioned earlier, the opportunities right now in data center infrastructure, particularly as demand for computing power continues to grow, with AI and cloud services driving the need for faster and more energy efficient systems, is pretty obvious. It's probably also finally worth acknowledging that while the semiconductor industry is touching all of our lives in some way right now, we are still at the very early stages of the AI and transformative technology cycle. History tells us that supply gluts and rapid innovation can make today's cutting-edge technology completely redundant tomorrow. For this reason, it's not only vital to diversify across the sectors, but find leading fund managers and strategies that are grounded in deep technical expertise, so you're not just playing cyclical risk. Investing in funds and strategies with the ability to navigate both the upside and downside of these cycles, and taking early enough and bigger enough bets to get large exposure within those companies, is absolutely critical for investors to succeed in this evolving landscape. The semiconductor industry is uniquely positioned at the intersection of AI, cloud computing, and national security, each of which will derive unprecedented growth in the years to come. As stewards of capital, I believe it's all of our privilege and responsibility to guide investments into opportunities that will define the future of technology, but also, more importantly, perhaps our children as well. I look forward to partnering with all of you on this exciting journey, positioning Australia and our inner communities to capture the immense potential that lies ahead. Thank you, everyone.